Or we can meet people too, either one.
Yeah, we can do the more informal networking way. Is there any question? Yeah.
Thank you. Yeah, Benoît Descourtieux from Oriental Patron Investment Management. And I wanted to ask Mark if he would agree with what Alan said, that investors never learn. Has there been any studies showing that over the years, patterns remain the same, or is there an evolution, is there an improvement in understanding, as Angelina was saying, understanding of how to make informed decisions?
It's a great question, and it's something I want to follow up on. There's limited research on learning in investors. We've done one study in China looking at a specific behavior, this disposition effect, and whether people learn to get over this need to hang on quite as much. There's a problem with much of the research, and there's a new paper that came out last year to try to address it, which is as you track people over time, the really dumb ones fall out of the sample quickly. And so you have two effects going on. You have a compositional effect and a learning effect. And the new paper is trying to separate out these, and it's hard. It was done, I believe, with Finnish data. So the answer is still kind of unknown. How much of this behavior is set in stone and how much is not? The one other thing that's been going on is some guys have been using Swedish twins to try to look about how much of behavior is in your genes. So there's a certain part that maybe you'd have to work even extra hard to get over, but there's a certain amount of behavior that's coming out of your genes that's not even learned. So I think your question's great. It's kind of at the forefront of where research is going, and we'll know more in the next year or two to come. But
well, Alan knows the answer, right? They never learn.
Maybe I think we need more practicing, because I just figure out one action that a trader can do better than a retail investor is to cut loss. Yeah. Because during the day, if we are being assigned a profit target, and we have to buy it and sell in the market during a certain period of time, okay? So sometimes we are pressurized to make decisions because we can't let this outstanding position to run overnight. So we have to make decisions right at this moment if something happened, okay? But individual investors try to avoid making decisions during difficult time. They want to pass it maybe tomorrow or a week later, and when the asset price drop further, they just leave it, okay? But trader cannot. So when we do our own investment, sometimes I think we cut loss, I think, faster than the individual investor. I give you my own example. During 1995, I bought an apartment worth 6 million Hong Kong dollar. And then 2 years later, before the Asian financial crisis, it's double, 12 million, okay? So I make a decision to try to move in this apartment, so I do the decoration, and I sought advice from one of my my old friends, I've been doing a property consultant, okay? And he told me, yes, property market is very good, okay? You better live in, and then maybe 6 months later, it's another 30% up, okay? So I moved into this apartment just right before the financial crisis in October, okay? So the market dropped, I think, substantially, and then each month I lost 1 million Hong Kong dollar. So from 12 million to 7 million, okay? So February 1998, I argued with my wife whether we should sell it or not, okay? And she said, okay, maybe we should do it, but let's put the price at the market level, maybe 6,500 per square feet. I said, no, if we want to sell it, we have to offer it below the market. And I make a decision, I want to cut loss because my job security is vulnerable, okay? And then we called the property agent, and he told, no one wants to buy property at this difficult time. I said, why? He said, there's no buyer. I said, if I offer at 6,000, he said yes. And then just, I think, 6 hours later at night, he bought, I think, speculators, and then to do it. And then eventually, I sold it at 7.3 million Hong Kong dollar. And then 1 month later, I think the Hong Kong government implement some policy, and then property market rebounds, I think, quite sharply. And then if I sell it, okay, if I sell it, I think a month later, I have 1 million more in my pocket. So my wife, I think, laughed at me and said, you are a professional trader, you sold at the bottom, okay? Okay, and then at year 2002, the same apartment, the market price, 4.3 million Hong Kong dollar. Okay, so maybe I think it's this kind of, I think during the difficult time, I was trained, I think, to make decision whether we keep it or not. So maybe I make decision faster than everyone. They try to put their offering price at the market level, even higher. Okay, yeah.
I think to deal with education, financial literacy at a very, very young age, as well as adding up the School of Hard Knocks. These are the two things of, for example, of Alan's example. He had the experience of actually trading before, so he could make the decision. But a lot of people in Hong Kong, as well as in China, they don't have the minimal financial literacy, which is one of the reasons why I think if China really wants to actually move up in terms of stock market participation, as well as for Hong Kong, financial literacy has to start at a young age. And then at the same time, the experience of actually trading on your own, learning when to cut loss, I think this is something that's really important. I know the regulators around the world have actually put in a number of courses, and especially in Malaysia, they're actually starting with Kids in Cash programs where they're getting into the nursery schools up to high schools to teach people how to invest wisely and getting it from the grassroots. And this is something I think Hong Kong, as well as China, is missing right now. And I think it's something that is very, very necessary if we want to deal with getting more and more people that are educated into the market. So that's just to sort of address part of your point. But financial education as well as investor education is really, really important. Most of the people that lost money during the financial crisis were, as Richard was saying, they're all educated people in books and things. I'm an expert witness on a case where a very, very, very wealthy doctor lost millions. And they had invested in accumulators, and they had bought over 100 accumulators at one time. Did they know what they were buying? No. But they had the money and they had the wherewithal and they thought they knew. But they didn't know that there was a complex derivative. It took me 5 hours to read the disclosure statements, and I'm still not sure I understand it. So you may be a great surgeon, but I can tell you, if you read those disclosure statements, it'll take you at least 5 to 6 hours with a legally trained background to understand it. And that, again, going back to that financial literacy, which is why the regulators now have changed over to the suitability issue of making it as simple as possible for investors to buy and understand the product. So.
I'm always wondering who will really look into those like 500 pages of IPO spec. If they do an e-version, probably can save hundreds, thousands, hundreds of trees, maybe. But anyway, I think it's a great discussion. Maybe we should do sort of the networking. People can be, feel free to ask questions, personally.
So that's the end of the seminar today, the formal part of the seminar today. So should we thank the speaker and also the panelists again for the great evening. Thank you.